Hi guys, it's Stock Curry, and in just a few minutes, I'm going to give you every single stock pick from the top 10 YouTubers. But first, let's do a quick market update, and I want to give you a quick lesson in trading. By the way, I want you guys to grab your trading journals and take some notes. If you don't have a trading journal, go grab a sheet of paper, a pen, a pad, something so that you can write down and take some notes. I'll give you a second to do that. Pause the video, go get a pen and paper and a pad, and get ready to take some notes. All right, I hope you guys have your trading journal or pen or pad or something. Guys, I've been trading for 20 years and I'm still taking notes. I'm still learning to this day. I'm writing things down. Here's the thing. This is a brand new kind of trading that I personally am not used to. In the last 2 years, retail investors have completely taken over the markets and they are controlling the stock markets. That is something brand new that I have never seen before. I never thought it would happen. And so I'm taking a lot of notes. I'm doing a lot of learning right now, even after 20 years of trading. And honestly, you guys should be doing the same. So let's get into the quick market update real fast. Yesterday, I predicted that the stock market would be down on Tuesday and again on Wednesday. We did, in fact, see it go down today. I thought that would happen in anticipation of the Fed speaking tomorrow, and that's exactly what happened. Now, on Wednesday, I also expect the stock markets to go down. I do not think that the Fed is going to speak favorably in terms of the stock market. Our last president was very, very focused on the stock market. The Fed wanted to keep their position, their jobs, and so they did everything they could to prop the stock market out. The new president, President Biden, he's not like that. He could care less about the stock market. So I don't think that the Fed is going to be doing things to prop up the stock market the way that they were doing over the past 4 years. I do think the stock market is going to go down tomorrow. Now, all of that said, guess what else happens on Wednesday? Stimulus checks are going to hit bank accounts. And a lot of people are going to be using that stimulus check to invest into the stock market, especially Zoomers and millennials. And so what I think is going to happen is they're going to put that money into the stock market on a Wednesday. A lot of brokers like Webull are going to give you what they call instant access to your cash. Basically means that your funds will be available for trading on the next trading day. So they put the money into the stock market on Wednesday as soon as that stimulus check hits their bank account. And then on Thursday, the funds are then available to trade. That's going to introduce a ton of buying pressure into the market. And so that's why I think on Thursday, we're going to see this huge rebound and stocks are going to go up. Now, let's get into the trading lesson. A lot of you guys have been asking me today, hey, Scott, why did you not sell all of your shares on Monday if you could predict that the stock market was going to go down on Tuesday and Wednesday? Why not sell the shares on Monday and then rebuy Wednesday at the lows? Well, the reason for that is a couple of reasons. Number one, I don't know what the stock market's going to do. I can predict all day long, but a lot of times I'm wrong, right? I'm not a prophet. I'm not Jesus. I don't know. So take last week, for example. Last week, I thought that the stock market would be down on Thursday and it would rise on Friday in anticipation of the stimulus bill passing over the weekend. But we got a surprise. The stimulus bill got passed on Thursday, and so Thursday was a big up day, and then Friday was a down day. And so what if last week I had sold everything on Wednesday, expecting a down day on Thursday, and then Thursday was a huge up day? I would have missed out on a ton of gains. So the problem is, day to day, we just don't know what the stock market's going to do. I can sit here and predict and guess all day long, and I might be right 70, 80% of the time, but at the end of the day, it doesn't matter. We don't know what the stock market is going to do day to day. So that's one reason why I didn't sell, because I just don't know. Take CCIV, for example. It was up 8% today. How could I have predicted that, especially on a down day? You don't know. So the second thing is, anytime that you buy a stock, and I want you to write this down, you make money when you buy, not when you sell. Okay? Write it down. You make money when you buy, not when you sell. What do I mean by that? Before you buy any stock, you should know 4 things. Number one, what is your strategy? All right? Is this a day trade? Is it a swing trade, a stock that you're going to hold for 1 to 3 weeks? Is it a long-term growth stock? Is it a long-term dividend stock? What is your strategy? Second thing you should know is, why are you buying the stock? What is the catalyst, whether it be technical or fundamental or both? What is your reason for buying the stock? The third thing you should know is, what is your stop loss price? At what point are you going to cut your losses and get out of a losing trade? The fourth thing you should know before you buy the stock is, what is your price target? At what point are you going to sell the stock and take profits? A lot of you guys have been asking me, Scott, how do I know when to sell? Well, the answer is you should know when to sell before you buy the stock. Before you buy the stock, you should set a stop loss price and a take profit price. So, if you don't know all four of those things, don't buy the stock. Wait and figure it out. So that is my trading lesson for today. And that is why I don't care about day-to-day price movements, because there's not a single strategy where that makes sense. If I am day trading, I don't care what the stock does overnight because I'm out of the trade the same day. If I'm swing trading, I don't care what the stock does day to day because I have a 1 to 3 week horizon. If I'm long-term trading, I definitely don't care what the stock is doing day to day. I don't even care what the stock is doing month to month. So that's why I don't really care about day-to-day price fluctuations. It doesn't matter. It's not important, okay? So that's all of the reasons why I didn't sell on Monday. All right, guys, let's get into today's stock picks. For those of you who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks on YouTube. I analyze stock picks from the top 10 YouTubers, and then I, every single day, compile all of my analysis into a daily video that I post right here on this channel. I spend hours every day watching YouTube videos so that you don't have to. All you have to do is watch one video each day, and you will get every single stock pick from the top 10 YouTubers. And all I ask in return is that you click that like button, subscribe, and click the bell icon so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. All right, I just want to remind everyone that I'm not a financial advisor and none of the YouTubers I follow are financial advisors either. Today's video is strictly for entertainment purposes only. For those of you who are wondering, you are currently looking at the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. All right, let's get into today's stock picks. First up is AAPL. This is Apple, and StockMo thinks AAPL will do well with the stimulus checks coming out. He thinks people will be spending some of their money on new iPhones and laptops. StockMo gave a year-end price target range of $175 to $200. Next up is ABBV. This is ABBV, and StockMo listed this as one of 10 dividend stocks to buy now. The current dividend yield is 4.69%. StockMo reminded us that we're not looking for growth on dividend stocks. We're looking for stability. Dividend stocks are not growth stocks. ABBV is up 14.5% over the past 3 years. That's an average of 4.83% per year. Now, 4.83% growth is not great. In fact, it's below the market average. But if you add in the dividend, then the average annual earnings are not 4.83%, but rather the 4.83% growth plus the 4.69% dividend, which equals 9.52%. And actually, if you had done dividend reinvestment purchases, or DRIP, you would have had higher growth than that. Now, you can maximize your earnings on dividend stocks by dollar cost averaging in. While ABBV is currently trading at $110.84, at 2 points over the past 2 years, it was trading below $65. So if you had been purchasing just a little bit of ABBV every month for the past 2 years, your annual profit would have been closer to 33.5% per year. And that's hard to beat in a long-term portfolio. Next up is BNGO. This is Bionanogenomics, and Chris Sain said BNGO is now in a buy zone. He gave an $8.75 buy-enter price and an $8.45 ideal buy-in price. But I'm going to warn you to be careful with BNGO. BNGO is right at the 50-day EMA right now. If it drops below the 50-day EMA, it could drop down all the way to the 100-day EMA. I was hoping for a V-shaped recovery from the correction, but it's possible that some of the stocks we're talking about could see a W-shaped recovery instead, meaning that they might retest the lows of last week. I don't think that will happen, but it's possible. So just make sure you have stop losses on all of your plays. Next up is CCIV. This is a SPAC and they're merging with Lucid Motors. Lucid Motors is an American EV company and a competitor to Tesla. StockMo included CCIV in his list of the best growth stocks to buy now. He has a $40 to $50 year-end price target on CCIV. Now, ZipTrader released a video Tuesday night that went into great detail on CCIV and the future of the company. It was a great video with really good DD, and I would really recommend everybody watch ZipTrader's video that he uploaded Tuesday night. Next up is CRWD. This is CrowdStrike, and this is a cybersecurity company used by banks and other large companies to help cybersecurity professionals manage threats. Christine noted how CRWD was up 5.7% after hours today after reporting strong earnings. Christine reiterated his buy-enter price of $190 and said to wait for this to cool off before buying in. Next up is CSWC. This is Capital Southwest, and StockMo listed CSWC as one of 10 dividend stocks to buy now. The dividend yield is currently at 7.69%. I will remind you that this dividend stock is also a favorite of Chris Sane. Next up is FB. This is Facebook. StockMo said FB is one of the best growth stocks to buy now. StockMo thinks companies are going to increase ad spending on Facebook to try and get people to spend their stimulus checks with them. That in turn should increase Facebook's profits. As a result, StockMo thinks FB is going to beat on earnings in Q2. The average analyst price target is $345, which represents a 22% upside from Tuesday's closing price. Next up is HD. This is Home Depot, and StockMo listed HD as one of 10 dividend stocks to buy now. The current dividend yield is 2.34%. Next up is HITIF. This is High Tide, and they're an MMJ stock. They are the largest MMJ retailer in Canada. Technically, HITIF is showing good momentum, but the RSI is dropping and the MACD is struggling to turn bullish. So I do expect HITIF to drop back down to the trend line before going back up. I think you'll be able to buy HITIF under 60 cents, most likely somewhere around 58 cents. Now, despite this being an OTC penny stock, the traveling trader showed us that the fundamentals actually look pretty good. HITIF grew revenues by 258% in 2019 and 162% in 2020. They are also very close to profitability. Now, at their current cash burn rate of $5.23 million, they have enough cash to last about 1 year. But if they can become profitable before then, and they are on track to do that, then they will not need to raise any more cash, and the chances of another share offering will be extremely low. They were profitable in Q3 of 2020, which helped increase their cash balance. Now, this stock remains very risky. They have a lot of debt, and they don't have a lot of cash. Also, they are not currently profitable. So while HITIF is on the edge of becoming a great company, they are risky for now. If you want to buy HITIF, I recommend setting a tight stop loss at around 54 cents. Next up is J&J. This is Johnson & Johnson, and StockMo listed J&J as one of 10 dividend stocks to buy now. The current dividend yield is 2.5%. Now, I will let you know that personally, I will never buy J&J. I do not like the morals of the company. I do not like the fact that they knowingly put illegal chemicals in their baby products that they know harm kids, just to make a higher profit. I am an adamant believer that you should only invest in companies that you believe in, and J&J is not a company that I personally believe in. But to each their own. This is a profitable company, and I won't blame you for buying it. Next up is KO. This is Coca-Cola, and StockMo listed KO as one of 10 dividend stocks to buy now. The current dividend yield is 3.28%. Next up is LODE. This is Comstock Mining, and they're a gold and silver mining company. They also own 64% of Linico, which is the lithium battery recycling arm of Aqua Metals, ticker symbol AQMS. The traveling trader likes LODE as an inflation hedge. The reason for that is as inflation goes up, the price of gold and silver also tend to go up. Next up is LUMN. This is Lumen Technologies, and StockMo listed LUMN as one of 10 dividend stocks to buy now. The current dividend yield is 7.13%. Next up is MP. This is MP Materials. They are the only rare earth mining company in North America. Dead Inside let us know that earnings are coming up Thursday after the market close. Dead Inside thinks MP is going to report good earnings because the price of rare earth metals has increased as demand for rare earth metals has skyrocketed, mainly due to the explosion in EV manufacturing. Many rare earth prices have doubled in the past 3 months. Dead Inside does not think the price increase in rare earth metals has been factored in properly in MP's estimated earnings, and that's why he thinks MP is going to have great earnings. Next up is NAKD. This is Naked Brand, and the traveling trader looked at the technicals on NAKD, and he sees that on the one-day chart it is forming a fractal, which means the same pattern over and over again. Specifically, the traveling trader found what he believed were two pennants on the chart. The last pennant resulted in a bullish breakout after about a month and a half of consolidation. You can see the fractal here as the stock goes up, trades flat, up, trades flat, up, trades flat, and up, trades flat. Now we've had a month and a half of consolidation since the last big run-up, so the traveling trader thinks NAKD is about to break out and run up again. Personally though, I completely disagree. When I look at the weekly chart going back 2 years, I can see a pattern of a 2-week run-up followed by a long sell-off. We see that here, followed by a long sell-off. We see that here, followed by a sell-off. We see that here, followed by a sell-off. We see that here, followed by a sell-off, and now we're seeing it here, followed by what I believe is the beginning of another long sell-off. I can also see on the daily chart that the RSI is dropping and the MACD remains bearish. On the EMAs, NAKD remains below the 10-day and 21-day EMAs, which is also bearish. Now, the traveling trader did say that the fundamentals on this company were horrible, and I agree with that. Personally, I will not be touching NAKD. Next up is NIO. This is NIO, and they're a Chinese EV manufacturer. StockMo listed NIO as one of the best growth stocks to buy now. That said, he also said that NIO will always be on his list of the best growth stocks to buy now. StockMo did lower his price target slightly from $100 by the end of the year to a range of $75 to $90 by the end of the year. Next up is NLY. This is Annaly Capital Management, and StockMo listed NLY as one of 10 dividend stocks to buy now. NLY currently has a 10.10% dividend yield. Next up is NOK. This is Nokia, and the traveling trader likes NOK because of its fundamentals. NOK continues to pick up new 5G contracts on an almost weekly basis. They are also cutting 10,000 jobs, which will increase their profit margins. Technically, NOK is quite bullish. The MACD is bullish. The RSI is rising, and on the chart we can see the swing to the upside happening. The traveling trader likes NOK as a long-term growth stock and not a swing trade. He does recommend setting a stop loss at around $3.90 just in case NOK tanks. Next up is NVDA. This is NVIDIA, and StockMo listed NVDA as one of the best growth stocks to buy now. This is not performing as well as StockMo thought it would. Still, it has an average analyst price target of $657, which represents a 24% upside from Tuesday's closing price. StockMo gave a $700 year-end price target. Next up is NYCB. This is New York Community Bank Corp. StockMo listed NYCB as one of his 10 dividend stocks to buy now. NYCB has a 5.52% dividend yield. Next up is PINS. This is Pinterest, and StockMo listed PINS as one of his best growth stocks to buy now. PINS has an average analyst price target of $92, which represents a 25% upside from Tuesday's closing price. Next up is PYPL. This is PayPal, and StockMo listed PayPal as one of the best growth stocks to buy now. They just added cryptocurrencies to their platform, and StockMo thinks that is going to increase their earnings. The average analyst price target is $309, which represents a 24% upside from Tuesday's closing price. Next up is QCOM. This is Qualcomm, and StockMo listed QCOM as one of the best growth stocks to buy now. QCOM is only up 6% from the bottom of its correction, so it still has a lot of room to run up. The average analyst price target is $170, which represents a 27% upside from Tuesday's closing price. Next up is RIOT. This is RIOT, and they're a Bitcoin miner. Keenan Gray said you should buy RIOT on a dip. He gave a buy-enter price of $49 and an ideal buy-in price of $43. Keenan Grace also let us know that RIOT has earnings coming up at the end of this month, which could move the share price. Now, if we take a look at the price of Bitcoin right now, you'll see that while it's dropping, it is still trading well above its trend line. BTC could drop all the way down to 45,000 and still maintain its upward momentum. If that happens, we can expect RIOT to follow suit. RIOT has almost the exact same chart pattern as BTC, which means it also has the same trend lines. So if BTC gets down to around 45,000, then RIOT should drop down to around $43. And that is where Keenan Grace gets his ideal buy-in price. Next up is RSI. This is Rush Street Interactive, and they're a gambling company. StockMo listed RSI as one of the best growth stocks to buy now. StockMo picked Rush Street over DraftKings because DraftKings has already run up. The average analyst price target is $24.75, which represents a 20% upside from Tuesday's closing price. Next up is SESN. This is Sensen Bio, and they're a pharmaceutical company, not to be confused with SENS. The traveling trader let us know that SESN just reported earnings. Earnings were good, which is why the stock was up today. They also have FDA approval pending on one of their drugs. Fundamentally, they have plenty of cash on hand, so share offerings are most likely not a concern right now. Nothing is guaranteed though, as NNDM showed us. Technically, the MACD is about to turn bullish, and the volume is increasing, which is also good. But the stock did close right at a level of resistance on Tuesday. If SENS can close above $3.02 on Wednesday, then that will turn the MACD officially bullish and also break us above resistance. If that happens, then I would be comfortable buying SESN on Thursday. But if SESN bounces off of resistance on Wednesday and goes down, then I think we're looking at a buy-in closer to $2.30. Next up is SNDL. This is Sundial Growers, and they're an MMJ stock. Keen and Grace let us know about an article that came out yesterday that talked about a joint venture that SNDL entered that will allow SNDL to expand globally. Keen and Grace give a buy-enter price of $1.40 and an ideal buy-in price of $1.30. Now technically, it's really hard to tell where SNDL is going to go from here. The EMAs point to bullishness, but both the RSI and MACD are neutral. I think there's a greater chance for bullishness than bearishness on SNDL, but who knows? So I'm going to give you a completely different strategy from Keen and Grace. I think that buying SNDL at the current price is the right thing to do. Then set a stop loss at $1.35. Because if it hits $1.35, then it will most likely drop down to the 50-day EMA at around $1.20. And that would be the point that you will want to rebuy in at. Next up is SNOW. This is Snowflake, and they're a cloud-based data company built on top of AWS. StockMo owns SONW. He thought it would perform better, and he thinks now this is a good growth stock to own. The average analyst price target is $295, which represents a 27% upside from Tuesday's closing price. Next up is SOL. This is Reyna Solar Power. They're a solar company. Keen and Grace mentioned SOL as a rinse and repeat play. Now that it's down 10% today, it's back to the 100-day EMA. Now I gave you guys a $13.50 stop loss price in SNDL, and it hit that price today with a low of $13.16 on the day. The RSI is bearish, and the EMAs are also bearish. The only thing is the MACD is bullish, and the 100-day EMA has historically been a level of strong support for SOL. I set my stop loss price a little below the 100-day EMA, thinking that if SOL hit that price, then it would most likely drop down to the 200-day EMA, which is currently at $9.72. So getting stopped out today was actually a mistake. I should have set that stop loss price to $13 instead of $13.50. So now the question is, when do you buy back in? Well, for me, it all depends upon what happens on Wednesday. If SOL goes down and closes below the 100-day EMA, then I'm looking to buy back in at around $10. If SOL closes above the 100-day EMA on Wednesday, then I'm fine buying in at whatever price it is at on Thursday, because I think SOL will stay above the 100-day EMA in that case, and that means we're currently at the bottom. Next up is STPK. This is a SPAC and they're merging with STEM. STEM uses AI to optimize energy usage by automatically switching between battery power, on-site generation such as solar, and grid power. Dead Inside let us know that STEM reported better than expected 2020 year-end earnings. Their revenues more than doubled year over year, coming in 10% higher than the outlook that was provided when the merger was announced. They also left their guidance unchanged, which includes a 400% increase in annual revenue in 2021 versus 2020. By the way, STPK already has a full contract backlog for the entire 2021 year. STEM's merger with STPK is expected to take place sometime in April or May. Dead Inside had previously given a $100 price target on STPK, but that was before the correction. Next up is T. This is AT&T, and StockMo listed T as one of 10 dividend stocks to buy now. This has a 6.94% dividend yield. Next up is TXN. This is Texas Instruments, and StockMo listed TXN as one of 10 dividend stocks to buy now. The current dividend yield is 2.30%. But as you can see on the weekly chart, this is also a growth stock. So you get the best of both worlds with a long-term investment in TXN. Next up is UPS, and this is UPS, or United Parcel Service. Stock Mode listed UPS as one of 10 dividend stocks to buy now. The current dividend yield is 2.51%. Finally, we have ZOM. This is Zomedica, and they're a pharmaceutical company. Keen and Grace let us know that ZOM's long-awaited Truforma diagnostic tool got released today with their first commercial sale. The early release is good news, but Keen and Grace still reiterated his $2 buy-ender price. Now, I will remind you that I would higher with my price points. I gave you a $2.40 buy-ender price, a $2.15 ideal buy-in price, and a $1.90 stop-loss price. My reasoning was based upon the trend line that you see here. In fact, ZOM bounced right off of my trend line today, which tells me that other traders are seeing the same thing that I'm seeing. Now, Zip Trader said that if you bought ZOM at a lower price, now would be the time to take some profits because the anticipation of the Truforma machine launch is over. So to recap, Zip Trader says to sell, Keen and Grace says to wait, and I say buy now. Alright, I hope you enjoyed this video and got a lot out of it. Comment down below what your favorite stock pick is. And if you want to get some free stocks, sign up for Webull or SoFi using my links in the description below. When you sign up for Webull, they're going to give you 2 free stocks worth up to $1,850, and all you have to do is deposit $100. When you do that, they're also going to give me 1 free stock, so it helps you out and also helps the channel out. Finally, remember to hit the like button, subscribe, and click the bell icon if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.